Hi traders, welcome to a new special video. So today I wanted to make a brief but very informative video about what we know as absorption in trading. Let me just bring up the black screen. If you haven't done so, make sure to subscribe, hit the thumbs up. Check out my website for more info also on my trading courses where I go into a lot more detailed strategies using all these concepts and tools. So yeah, absorption is a term that you're going to hear a lot, especially when you're talking about order flow. That's looking at the level 2 data, actually looking into what the buyers and sellers are doing, the executed contracts and the depth of market. So absorption basically means that price is getting to a level and there's a lot of aggressive buyers or sellers that are getting, as the word implies, absorbed, and their orders are getting all used to fill in large limit orders, and then they get trapped, and then usually you will see some kind of reversal, even if it's short term. So first of all, let's distinguish between, there's two types of traders. We have what we call retail, which is basically, like most of us, is just smaller traders, or even some smaller prop traders will qualify as retail. These are people that are trading just a few contracts at a time. They're basically not executing any significant volume that can really move the market. Then you have your institutional traders. This is going to be, sorry, I know the font is not good at all, but you got your institutional traders. This is going to be banks, hedge funds, etc., where these are really, really large players that are going to be looking to get filled on really, really large orders. Now, these traders, the institutional players, they're not simply going to just go into a chart and they're just not going to just randomly market buy 10,000 ES contracts wherever, because what happens? Well, we have our DOM right here. We have our bids on the left side, our asks on the right. So then you can see price, let's say, would be right here at the moment, 4,036.25. And over here we have all our resting limit orders to buy at these lower prices. And then over here we would have all our limit orders to sell on the ask resting over here. So if you're trading and you're using limit orders, you are what you would know as a passive trader. You're basically waiting for market to come and fill your order. Now, markets need both passive and aggressive traders. If there would only be passive traders in the market, then price would simply not move, because everyone would just have orders resting here, waiting for the market to move. But if no one is aggressive in trying to get filled and push the market, either buy at higher prices or sell at lower prices, nothing is going to move. So what happens? We have aggressive traders that are basically people that are executing market orders. When you execute a market order, you are basically lifting the offer or hitting the bid. So what does that mean? So for example, if we're here right at 44,035, 36.25, which would be right here, if I want to just get filled and go short, I need to market sell. So what would that mean? If I have enough to consume all the limit orders that are resting at 4,036, then if I just hit market sell, I'm going to get filled at the next available price down, which will be 4,036. So basically, I am giving away one tick just to get filled immediately at the next available price. Now, if you're talking about markets with very bad liquidity and very thin order books, if you're executing a large amount of contracts, you run the risk of basically making this whole market collapse. Because let's say if you have between here and here, let's say if altogether you got, I don't know, 100 contracts to buy resting over here, and I'm right here and I just hit market sell 200 contracts, I'm going to consume everything here immediately and probably end up like around here as I consume 200 contracts to sell. And as you can see, if I look at my average entry, I wanted to get in around 4,036, and I'm going to end up getting filled all the way down here around 4,031.75. So you can see how if you're trading very large size and you are executing just market orders, being very aggressive, your fills on your orders are going to suffer and you're going to get what's known as slippage. So what happens? Well, the big players, traders or institutions, banks, hedge funds that are trading very large size, what they do is they place their orders on the DOM, resting orders, but obviously they want to be sneaky about it. They're not just going to come here and put 1,000 contracts to buy right here, because it's going to be very obvious. If you have 30 here, 40 here, 32 here, 50 here, and then 1,000 here, it's going to be very obvious that a very large player is looking to get and go long right over here, so people can front run him, etc. So what they do is what they call, what is known as iceberg orders, meaning they just start breaking down their orders. So instead of putting 1,000 to buy here, let's say 1,000 just to buy here, what they'll do is they'll just start splitting. So maybe they'll put 150 here, 85 here, 120 here, 70 here. Just they'll start splitting it up so they can basically disguise all their orders in the order book. Now, sometimes we will see a level with a lot of resting orders, and that's because maybe a lot of traders are expecting price to go or hold that level. This happens especially a lot in big round numbers. If you look at a DOM and you're going into like a level like 4,000, 4,050, like 4,100, just very big, large round numbers, usually there'll be a lot of orders to buy or sell at those levels, okay? But basically the whole explanation I'm giving you is that big players are going to just break out their orders and they're just gonna lay them all on the bid or the ask, and they're gonna just leave limit orders there to get filled. And how did they get filled? Well, that happens when aggressive traders, mostly retail traders, smaller traders, are going to come and they're going to just execute or try to chase the market and start just aggressively buying the highs or selling the lows. And if you see that the market, even though there's a lot of pressure on the delta, it's basically the difference between executed orders to buy minus executed orders to sell. So if there's a positive delta, and you can see delta right here. This is a study on Sierra chart, but a lot of platforms have this, where I have my session volume profile, and then this horizontal red and green lines over here are executed market orders to buy or sell. So as you can see, right over here at the lows, there's a lot of aggressive selling. That means a lot of people got trapped here. They got absorbed because there was a lot of big limit orders to buy here, and then we went up. Same scenario here. You can see this big delta to buy, meaning a lot of traders got trapped trying to buy the highs here. And I'm going to show you. I use two tools mainly to identify absorption. I use either a delta volume profile, which in Sierra chart, it's basically a volume profile, but instead of showing total volume, what we are showing is ask volume minus bid volume. So basically delta. Okay, so I use a delta profile, and I also use footprint charts to see the executed orders on the bid and on the ask. So on the DOM, bids are orders to buy here, and asks are orders to sell above price. On the DOM is the opposite, and if you missed it, I have a whole video going over principles of footprint charts that I recommend you all go check out. But basically on the footprint chart is inverted. What you have on the left is executed orders to sell, so aggressive sellers on the left, executed orders to sell, and executed orders to buy on the right, meaning aggressive buyers on the right. So I also use this to see, okay, if I see this and I see that price market open here 9:30 a.m., immediately we dumped. Price came back here, and look, this is a 5-minute chart. Look right here. Basically for 50 minutes, market was trying to break through this level at 42, 43.50 pretty much, or around that price, around 42, 44. Price spent 50 minutes coming back over and over to this level, and we failed to break through. It could not break through, and you can see how this, obviously this is at the end of the day, but I'm going to put a replay soon so you can see how this bar starts filling in slowly as price keeps coming back and back here. This bar is just filling in more and more. And then we come here and the same thing. And also on the footprint, we're going to identify how you can see that players are getting absorbed at this level. So over here, we have this whole area here is this area right here. And what can we see right here at this level? Well, you can see right here, like I was saying, right around 43.50. So right around this area right here, you can see on these candles, specifically in this 3 candles here, which would be this one, and this one right here. These 3 candles, look at these candles here. We got aggressive buying right at the top. This blue shading, the darker the color blue I have here on my footprint, that means the more volume of aggressive orders to buy. The darker the red is the more aggressive volumes to sell, or the more aggressive or higher volumes of selling, and the blue more aggressive volumes of buying. And what can we see here? Well, you can see in this case how right at the top of this candle we have our point of control, meaning the most volume traded at the top with aggressive buyers right on the tip, and price pretty much closed down here. It rejected. We come back again, and again a bearish pin bar candle with a bunch of aggressive buying right at the top of the wick. We come back again, same thing, point of control of the candle at the top. We have a small doji style candle, small body. And again, look at this dark blue, dark blues right near the tip. And then on this one as well, right here, again, aggressive buyings. And look what is going on. We have all this positive delta, meaning all these candles, we have more buyers, aggressive buyers than sellers, and yet market cannot break above here. It comes back over and over and we cannot break. What does that mean? Well, what this means is there are very large limit orders resting at this price. Price comes in, aggressive buyers start buying near the tops, and you know that in order to execute a limit sell order, you need a market buy order or an aggressive seller to hit that bid and fill it in. And so we come in, limits get filled, market goes down, limits here can either still be resting or just reloaded. Market comes back again, another try, 5-minute candle here, rejected. We come back again, 5-minute candle at the top, rejected. We come again, 5-minute candle, high buying at the top, rejected. Okay, so that is the most evident sign of absorption and the simplest way to use these concepts, where basically you see market continuously trying to break through a level, and then you have here on your order flow a lot of aggressive buyers that are now caught off sides. And now let's see what happens here when we come back. Well, when market comes back over here, which is right here, we can see the same scenario unfolding. And I'm going to mark this here. We're focusing on this area right here. So basically when we come back into here, this is a double top basically. And obviously you can see the day has been very bearish. Price is below VWAP, and you know, we're just making lower highs, lower lows. So now let me just quickly put on the chart replay. So this is 819, and let's put this at 1234. Okay, and I'm just gonna hit OK. It's gonna take a little bit to load here, but basically this is one of the best functions that you can do to practice, is just to use replay functions, and that way you can simulate trading and go back and observe what was happening in real time. So let's just let this load up here. Okay, the footprint is going to load first. Okay, so we are right over here, and we're going to pay attention what happens when we come up into this point. So we're coming up to this point. Pay attention. Let me pause here. Pay attention to the blueprints on the candles and where the points of control are. The points of control are these little black rectangles, and you're going to see how when we come back here right at this level, and you can see this is also value area high for the session. We have our profile for the session. This is our value area low here, value area high here. So we're coming back into a previous area of absorption. It is the value area high of the session, and it is also the top edge of the volume of the high volume node here, which is the ideal area to enter short when we are in a downtrend scenario. Okay, so let me clean this up. I'm gonna hit play again. This is going at 5 times the normal speed, and just pay attention to the prints here, how we're gonna get a lot of aggressive buying right into this area, and they're just gonna get absorbed. So market is coming here. Maybe let me just speed this up a little bit so it doesn't take super long. Okay, we're pulling back. This is again 5-minute candles. You can look at this any chart, any time frame, or you can look at tick charts. There's a lot of different ways to see this. The main thing is just identifying when aggressive buyers are trying to buy a level and it is not budging and they're getting absorbed. So right here we just touched value area high and we're back into previous resistance areas. Right here you can see this is a 5-minute candle. Look at this candle right here. We came into value area high, aggressive buying at the top, and a very bearish close on this candle. Point of control on the top here. We're coming back into the level again. And again, pay attention here. A big aggressive buying right at this level, and price is not able to break through here. They're absorbing with large orders to sell, large limit orders right at that level. We're coming back. Okay, you can see now we're getting some aggressive selling here as well, but we're breaking through their higher. Now look at this. We're getting dark blueprints right around the top of the candle here. And now we just rejected. And look at this candle now. This is important. This, we have a divergence here on this candle. Look at the delta. We have a very bearish, let me just clear this all out. We have a very bearish pin bar, a red pin bar right here, rejection, high buying volumes at the top, and the delta is positive, meaning even though we had a bearish candle on this 5-minute time frame at this level, there was more aggressive buying than selling, and yet we had this big rejection. So that's a big sign of absorption again at this level. We knew there was absorption here, but now we're coming back to retest it. So we want to see if this player or players that were holding the market here are still present. And from the looks of this, we're confirming that this level is indeed still holding. Let me move back here again. Okay, let's see if we come back again to this area. Market is pushing up again. We come again into this level. We're trying to break on top of this previous candle to continue upside and break through this highs. Rejected again. We did not get so much aggressive buying at the top here, but let's see now. We're rejecting, coming down. Okay, we're coming down. Let's see if there's another try here. Okay, you can see we're getting a lot of aggressive buyers coming in here, just trying to hold this market up. They're trying to just push this up again. and all this buying is getting absorbed as well. So also as markets, as they get absorbed in one level and we fall down, then big sellers just start moving down their positions and start absorption and continuation of the trend at lower levels. And let me see, I think that's pretty much it. Yeah, and then from here you can see how now we're getting a lot of big selling deltas, big aggressive sellings. Pretty much everyone that bought the top here knows they are now on the wrong side, and they're just having to bail out. They're having to just close out their trades for a loss, adding to the selling pressure. And you can see now a lot of bearish imbalances as well, a lot of aggressive selling. And once aggressive sellers plus the big players or the big limit orders are in sync in the same direction, then that's when trends intensify and they'll just start continue going down. Okay, but in essence that is pretty much the principle. So again, for absorption, what do we look for? We look for price to come into a level, whatever time frame you're using, even if it's a tick chart, a volume chart, a range chart, anything. Pretty much when we get to a level and we see aggressive buying in this case, but we're failing to break through, and you see a lot of trap traders at the top, that is a classic sign that we're getting absorption, and it is possible that we are just going to have a reversal from there. Now, is it possible to break through absorption? Of course. There happens sometimes. You can see on charts where, let me just stop the replay here. There's sometimes on the chart you'll see where a market is coming up, it's getting stuck on a level, but let's say we're making like an ascending triangle and eventually market breaks through. What happens here is, orders start getting consumed over and over, and eventually either the big seller that is holding the markets here are big sellers, they get completely absorbed, they get blown, and then they have to just bail out, adding to the buying pressure to get out of their positions, or they'll simply pull out their orders, clear the order book, and then all the liquidity that was holding the market is just gonna disappear, and then the aggressive traders can just blow through a level. And yeah, you can see it, for example, you can see it like on a chart like over here. You can see how market broke through. We have this high volume node. You can see a lot of aggressive selling here. So right around here and right around here, we had a lot of aggressive selling, absorption at these levels, traders getting trapped here in the wrong side, and then market just goes against them. But then eventually right here, late in the day, we get back to this level, and this whole the big traders that were pretty much holding and absorbing all this selling are no longer there, and then the market just breaks through that level. Okay, so that's pretty much it for the video, guys. I hope this has been insightful, and again, if you want a lot more detailed strategies and how I use absorption in my day trading strategies to execute, find patterns and different combinations and confluences that I have with order flow, volume profile tools, definitely check out the courses that I offer through my website. If you're not subscribed yet, make sure to subscribe.